Hi everyone, welcome back to my channel and welcome back to one more useful and informative video. I hope you all are doing great. Today let us discuss about loans. If you are a fresher or a new job holder or if you are looking for a loan, then this is the right place you are in. I sincerely suggest you all to watch the video till the end so that you will get some useful insights on how to proceed for a loan. Now without wasting time, let's dig into the topic. Loans are borrowed money that can be used for large purchases, debt consolidation, and emergency expenses as such. Generally, loans are paid in monthly installments. So, depending on the income capacities, one should opt for the loan amount and the duration of time to pay back that loan amount. As you all know, loan can act as a double-edged sword. It can be greatly beneficial if you can keep up the monthly installments, or else you would end up paying penalties for not paying it on timely basis. Nowadays, getting a loan is so easy. Banks are waiting for potential customers with loan offers, promises on low interest and easy process. Guys, remember that these all offers are marketing techniques that are used by banks to attract the customers. So, it all depends on you to decide whether loan is necessary or not. Here are few things to know before you take a loan. Number 1. Why you need money. Before you check with yourself why you need a loan, the most critical factor to consider is your financial status. As said before, a loan can help you or hurt you depending on how you manage it. In general, any individual will look for a loan when he has to buy a house or buy a vehicle or buy a property or for any medical emergencies as such. Guys, remember that though these are many reasons to take a personal loan, no matter what, it has to be paid back eventually. So choose wisely and be smart in picking up the options for a loan. Number 2. How much can you afford to borrow and pay back? Always remember that home loan should not exceed more than 40% of your net income. Car loan should not exceed more than 15% of your net income. And your personal loan should not exceed more than 10% of your net income. So, all loans together should not be more than 50% of your net income. So, to check your loan to income ratio, then you can use this formula. Your total EMIs divided by your monthly income into 100. So in that case, if your loan to income ratio is 20 to 25%, then it's quite comfortable. If it is 25 to 40%, then it's a caution. If it is 40 to 50%, then it might sound stressed. And if it is above 50%, then it's high time and it's alarming. So you have to take right step there. So you always make sure that your loan to income ratio is within acceptable limit. So take a loan that you can easily repay. Now let's take a small example over here. There is a X person who has taken 2 personal loans worth 5 lakhs 5 years ago. At that time, he was paying 18,000 rupees as EMI, which is around 40% of his take home. Now after 2 years, he again have taken a car loan worth 6 lakhs. And in last year, he have taken his third personal loan, which is 12 lakhs for many reasons. And today, he pays almost 50,000 only EMI, which is 72% of his take home. So to calculate this, I used loan to income ratio formula. So in this case, what about savings? What about his retirement planning? And what about his kids' education? So always remember that loan should not exceed 50% of your income. Number 3. Your credit score and credit history. Firstly, what is credit score? It is a measure of an individual's ability to pay back the borrowed amount. Credit score can range anywhere between 300 to 900, with 900 denoting maximum credit worthiness. A credit score of 750 or above is ideal and aids in qualifying for personal reasons as well as credit cards. So if your CIBIL score is below 750, then you'll find it harder to borrow funds from banks. So remember to keep your CIBIL score above 750. There are few factors that will affect your credit score. Number 1. Missed EMIs. If you are not able to pay EMI, obviously you will be slapped with penalties and it will signal your inability to pay other loans. Number 2. No loan history. If there is no active loan account, then there will be no indication for any lender to view your loan payment capabilities. Number 3. Unused credit card. When credit card is not used, lenders will have no idea about your repayment behavior. So use your credit card once in a while. Number 4. Too many cards and too many loans. This will indicate that the borrower is prone to high spending and low repayment. So it is always good to have very less loans and very less cards. Number 5. Outstanding debt. It is always good to clear off your outstanding debts. If not, it will signal you that you are unfit for further loans, and of course it takes a toll on your score. There are few benefits of having a high CIBIL score. Number 1. Your loans and your credit cards will get approved soon. Number 2. You will get cheaper interest rates on loans. Number 3. You will get better deals on credit cards. Number 4. You will get credit cards with higher credit limit. Number 5. You will get discount on processing fee and other charges for loan applications. Now, continuing with the things that you need to know, you have to understand the documents. So always go through the documents related to loan very carefully. Do not make a habit of light reading. So read the terms and conditions carefully to avoid unpleasant surprises, because some lenders are intelligent enough to slip the conditions in paragraphs. So it is always good to get a financial advisor before you take a loan. So there are few hidden costs that are not openly discussed. Number 1. Loan processing fee. Some lenders charge 1% of the loan value as processing fee. For example, if you take a loan of 10 lakhs, then you are supposed to pay 1% of which is 10,000 rupees, and it's a loss for you. Number 2. Failed payment fee. It's like a penalty that you need to pay if you don't have money in your account to cover the payment. Number 3. Prepayment penalty. This is the payment charged for clearing the loan early than the agreed tenure or duration. It's a tactic that lenders use to get the full amount of interest from you. So look to make sure your loan has no prepayment penalty. Number 4. Late payment fee. This not only hurts your credit score, but most lenders will charge you fee if you make your payment even a day late. Keep tenure as short as possible. Though longer tenure might sound tempting as you have to pay low EMI every month, but you will end up paying more unknowingly. So keep your tenure short and pay high EMI so the interest that you pay will be much lesser than any other. So finally, it's not a good idea to take a loan for luxurious things. If you want to have a nice car, or if you want to have a luxury house, or if you want to have a destination holiday, then start saving and investing right now. Always remember the old saying, don't live beyond your means. And now with this being said, hope you found this video useful and gave you some useful insights on how to proceed for a loan. And I want to remind you again that take a wise and smart decisions while taking a loan, or else it will affect your critical financial goals like your savings on your retirement or your kids' education. And yeah, that's it for today. Hope you all like this video. So please do like, comment, share and subscribe to my channel. Do not forget to tap on the bell icon for further notifications. Thank you.